Alrighty guys, so this is the 13th video under Maybe, and it's the 21st under Accounting, and in this video we're going to talk about preferred dividends, and these are a little bit different, how they show up on the three statements in comparison to regular dividends, and you're going to kind of see why here, right? So the main thing that we have to remember around preferred dividends is that they do not affect taxes, right? So on our income statement, we subtract out taxes first, and then we subtract out the preferred dividend. So I'll show you guys an example so that it's a little bit clearer here. So let's assume that a company pays out a $100 preferred dividend, right? How is that going to look on the three financial statements, right? So as always, we start on our income statement. And here, let me write out a relatively exhaustive income statement that covers a lot of the line items that we've covered already, right? So we start off with our revenue, we subtract out our cost of goods sold, that gives us our gross profit, then we subtract out our operating expenses, right? We subtract out our stock-based compensation, any other items here. Then we're going to get our EBIT, right? From our EBIT, we know that we subtract out our interest expense, we subtract or add our gains slash losses, we subtract out our goodwill impairment, and that gives us our earnings before taxes. And then from here, we're going to subtract out our taxes. And that so far, we have been saying that that gives us our net income, right? However, preferred dividends come out of this net income, right? So we subtract out our preferred dividends at this point in time. And then finally, we get what we call our net income to common. Right. So far, we've been using net income and net income to common synonymously because we haven't been assuming that there were preferred dividends. And that is a completely fine assumption to make in your interviews and your coffee chats. However, if a question around preferred dividends shows up, then it is worth noting where this exactly sits on the income statement, right? So let's zoom out here so you guys can see a little bit better. So if a company pays out $100 of preferred dividends, that's going to be right here. What does that mean for our net income to common? Our net income to common is going to be down by 100, right? And this is the number that flows through to our cash flow statement, right? So our net income to common, and common meaning the common shareholders, is currently down 100. And do we have to make any adjustments on our cash flow statement? We don't have to make any adjustments to our cash flow statement, right? There's nothing that we bought or sold or some like different situation around depreciation or anything like that. All we did was pay out $100 to our preferred shareholders, right? So our overall cash is going to be down by 100. That flows through to our assets on our balance sheet. So we're going to see that our cash is down by 100. Did anything happen with our liabilities? Nope. What happened to our shareholders' equity? Well, it went down by 100, right? So this is kind of the most important piece here, right? Is recognizing that if we pay out a preferred dividend, that comes out before we pay out to our common shareholders, right? Because they're preferred, they have they have a higher seniority, right? So because of that, our net income to common is adjusted down like dollar for dollar, and that means that our common shareholders' equity also is adjusted down by 100, right? So let's check our formula here. So our assets equals our liabilities plus our shareholders' equity. We can see that our assets went down by 100 and our shareholders' equity went down by 100, right? So in this scenario, our balance sheet balances. So really, the main point that you have to remember is where on the income statement does preferred dividends lie? and that is after taxes, but before net income to common. So that's essentially the main kind of trick with this with preferred dividends. But overall, it's not a pretty difficult topic. So I hope that's clear, and we'll hop into the next one here.